Hello everyone and welcome back to UGC Net Preparation and today I'll be covering accounting and auditing, which is basically from the paper 2 UGC Net Commerce Unit 2. So talking about the accounting and its concept, basically accounting is usually termed as the language of business, or it is basically the reporting of the results of a business. And usually, bookkeeping is a part of accounting. So, the characteristics of accounting consist of identifying the transaction and events, recording it, classifying it, summarizing it, analyzing, interpreting, and communicating the relevant information to the interested people. So basically, accounting is has this, and there are various systems of accounting that is there. Uh, First of all is the cash system of accounting, where cash is used as a payment or whenever like we are receiving a payment, whenever a cash is to be received by us. Usually the transaction is done in cash. The other one is basically the double entry system of accounting, which all states that the total whenever we there is a transaction involved, the total amount will be debited. The total amount that will be debited will always equal the total amount that will be credited. So that is a double entry system. And the accounting equation, it always states that accounting equation states that asset is equals to liabilities plus asset is equals to liabilities plus owner's capital or owner's equity. Accounting principle. So generally accounting principles, they are a set of rules and concept based on which the accounting process is done. So it consists of two things, which basically is the accounting concepts and convention. So accounting concepts, they are the basic assumptions, or they are also regarded as a broad general assumption, which are fundamental to accounting practice. That means whenever a transaction is made or transactions are recorded in a financial statement is prepared, accounting concepts, they act as a broad guidelines or a broad general assumptions. Another one is the accounting conventions. Excuse me. Accounting conventions, they are basically the customs or the traditions that has been followed since years and years, and it is generally regarded as an accepted method or procedure for a period of time by a particular enterprise. So accounting conventions, as stated, it is a certain restrictions for the business transaction, or it is the traditions that has been followed if a company is following a straight line method for depreciation. Then the similar way, what is happening is they are following a proper tradition to follow or to maintain a certain book of records in their company. So that is what is followed. So a tradition has been done that they need to record it this way. So a tradition is followed. So that is what is accounting conventions. And accounting conventions generally is of four types, which is convention of consistency, convention of full disclosure, convention of materiality, and convention of conservatism, which is also known as prudence. So consistency. So consistency basically is states that the same principles and concepts need to be followed every year. Just as I stated that if while recording a depreciation they are following a straight line method, then uh, if it was followed last year in 2022-23, the same method needs to be utilized or used when recording the depreciation in the year 23-24. So that is what the consistency convention implies. Another one is full disclosure. So full disclosure basically states about disclosing about all the financial information to the financial information by the company, so that what it happens is there is a complete transparency within the organization, which will help them in building, which will help them in conveying some kind of information to the interested participants. So this is what is the intention of the full disclosure convention. Another one is the materiality convention. So basically materiality, it basically states out that the material facts or the things of importance, the materialistic, what are the materials or what are the significant items, only the things should be recorded. Otherwise, if it is like not significant, stating as in some people may not consider 1 rupee to be very much significant in their lives. So if they are expending like money, they are making an expense of rupees 1, they may not record it. So same is the situation here, where materiality states that ignoring the insignificant items and only recording the items of significance. Another is the conservatism convention. So basically it states that so there is a need to anticipate loss rather than trying to anticipate the gain, and try always being ready for the negative outcome. And also stating that whenever a transaction is being recorded, so what is the lower value, that means what is the lower value, it must be recorded in the lower value. So this is what the conservatism states. So this is all for today, and I hope you like the video. Thank you very much.